G'day, future investors! Ever wished investing was as easy as picking out a delicious fruit basket? Today, we're diving into the world of ETFs, exchange-traded funds. Imagine a giant basket filled with different fruits, each representing a company's stock or a bond. Instead of buying individual stocks like picking fruits one by one, you get a whole basket full of them with just one purchase. This means you're spreading your money across different companies or assets, reducing the risk of putting all your eggs in one basket. ETFs are traded on stock exchanges just like individual stocks, so you can buy and sell them throughout the day. Stay tuned as we unpack these baskets of investment goodness.
All right, now that you've got the fruit basket analogy down pat, let's delve a little deeper into the mechanics of ETFs. These assets are carefully selected and bundled together based on a specific theme, index, or sector. Think of it like this: you want a basket full of citrus fruits only. Similarly, an ETF might focus on a specific sector like technology, containing stocks of companies like Apple, Microsoft, or Google. Or it could track a particular index like the S&P 500, mirroring its performance. When you buy an ETF, you're not directly buying those individual stocks or bonds. Instead, you're buying shares of the ETF itself, which owns those underlying assets. These shares are then traded on stock exchanges, and their prices fluctuate throughout the day based on the value of the underlying assets and market demand. See, not so complicated after all, right? Now you're well on your way to becoming an ETF aficionado.
Okay, so ETFs sound pretty neat, but why are they all the rage these days? These baskets come with a whole bunch of perks that have investors doing a happy dance. First off, ETFs are known for their low costs. Unlike some other investment options, they typically have lower expense ratios, which means you get to keep more of your hard-earned money. By investing in a single ETF, you're spreading your risk across multiple assets. ETFs offer incredible flexibility. You can find ETFs for almost any sector, industry, or investment strategy you can think of. So whether you're a seasoned investor or just starting out, ETFs provide a user-friendly and cost-effective way to achieve your financial goals. It's like having a personal shopper for your investments, but way less expensive and way more fun.
Now you might be thinking, hey, ETFs sound a lot like mutual funds. Are they the same thing? That's a great question, and it's time for a quick basket-to-basket showdown. Both ETFs and mutual funds offer diversification by pooling money from multiple investors to invest in a basket of assets. However, there are a few key differences. Think of mutual funds like those fancy fruit baskets you order online. They're only delivered once a day. Similarly, mutual fund prices are calculated and updated only at the end of each trading day. ETFs, on the other hand, are like the fruit baskets you find at your local market. You can buy and sell them anytime during trading hours. Another key difference is transparency. ETFs are more transparent, meaning you can see their holdings on any given day. So which one's the winner? Well, it depends on your individual needs and preferences.
Section 5. Variety is the spice of ETFs, exploring different flavors. One of the coolest things about ETFs is the sheer variety available. You've got your broad market ETFs that track major stock market indices like the S&P 500 or the NASDAQ 100. Then there are sector-specific ETFs that focus on particular industries like technology, healthcare, or energy. Want to invest in companies that prioritize environmental, social, and governance (ESG) factors? No problem. There are ESG-focused ETFs for that too. With so many options available, there's an ETF out there for every investor, regardless of their risk tolerance, investment goals, or taste in assets.
Section 6. ETFs aren't foolproof risks in every basket. Now, before you get too excited and start filling your shopping cart with every ETF under the sun, it's important to remember that no investment is without risk. One of the main risks with ETFs is market risk. Since ETFs track the performance of underlying assets, if those assets decline in value, so will your ETF. Another risk to consider is sector or industry risk. If you've invested heavily in a sector-specific ETF and that sector takes a downturn, your investment could suffer. And of course, there's always the risk that you've chosen an ETF that doesn't perform as well as you'd hoped. But hey, don't let these risks scare you off. By understanding the potential downsides and diversifying your investments, you can mitigate these risks. Make more informed investment decisions.
Section 7. Picking your ETF basket, a beginner's guide. So, you're ready to jump into the world of ETFs, but with so many options, how do you choose the right basket for your needs? Don't worry, we've got you covered. First things first, determine your investment goals. Are you saving for retirement, buying a house, or just looking to grow your wealth over time? Your goals will shape your investment strategy and help you narrow down your ETF choices. Next, consider your risk tolerance. Are you comfortable with a bit of volatility, or do you prefer a more conservative approach? Once you've got your goals and risk tolerance sorted, it's time to start researching different ETFs. Look at their expense ratios, past performance, and the underlying assets they hold. Consider investing in a mix of ETFs across different asset classes, sectors, and geographies to spread your risk.
Section 8. ETFs on a budget. You don't need a fortune to invest. Now you might be thinking, investing in ETFs sounds great and all, but I'm not exactly rolling in dough. Well, here's the good news. You don't need to be a millionaire to start investing in ETFs. Many online brokerage platforms allow you to buy fractional shares of ETFs. This means you can invest with as little as a few dollars, making ETFs accessible to investors of all budgets. Another budget-friendly option is to look for ETFs with low expense ratios. Remember, those fees can eat into your returns over time. Consider setting up automatic investments. This way you can invest a set amount of money into your chosen ETFs on a regular basis, regardless of market fluctuations. It's like having a personal shopper for your investments, but without the hefty price tag. Section 9. Diving into ETFs, your first investment. Alright, you've done your research, chosen your ETFs, and you're ready to make your first investment. Congratulations! This is a big step, and it's perfectly normal to feel a mix of excitement and maybe a little bit of nerves. First things first, you'll need to open a brokerage account if you don't already have one. There are plenty of online platforms to choose from, each with its own fees and features. Do your research and find one that suits your needs. Once your account is set up, it's time to fund it. You can usually do this through a bank transfer or by linking your debit card. Now comes the fun part, buying your ETFs. Simply search for the ticker symbol of the ETF you want to invest in, enter the number of shares or dollar amount if you're buying fractional shares, and hit that buy button. Remember, investing is a marathon, not a sprint. Focus on your long-term goals, stay informed, and enjoy the ride.
Section 10. ETFs for the long haul. Building wealth over time. Here's the thing about investing. It's not about getting rich quick. It's about making smart choices today to secure your financial future. And ETFs can be a powerful tool for building wealth over the long term. Think of it like planting a fruit tree. It takes time, patience, and a bit of nurturing to bear fruit. But with consistent effort, you'll eventually reap the rewards of your labor. By consistently investing over time, you're taking advantage of the power of compounding. This means your returns are reinvested, generating even more returns over time. Of course, there will be ups and downs along the way. The market will fluctuate, and some years will be better than others. But by staying focused on your long-term goals and riding out the storms, you'll be well on your way to achieving financial freedom.
Section 11. Ready to invest. Your ETF journey starts now. So there you have it, folks. The wonderful world of ETFs explained in all its glory. We've covered everything from what ETFs are and how they work to the benefits, risks, and how to get started. With ETFs, you can take control of your financial future and start building wealth one basket at a time. Remember, the best time to plant a tree was yesterday. The second best time is today. So, what are you waiting for? Start exploring the world of ETFs and see how these baskets of investment goodness can help you achieve your financial dreams. Like and subscribe